an intro today. We can do an intro and even just let guys ask a lot of questions like we've done before. And then that way kind of set up what we need to fill in as far as the gaps going forward for what the guys need to know most. And I do want pricing to be one of those, so we can target that as well.
Yeah, man. You know how to deliver the information. And I know that usually you're always on like a time crunch. And so you're trying to jam pack everything in. So take your time in whatever areas of annuities you'd like, and we can do this as many weeks as you want.
Okay. All right. Yeah. Good to see you guys on here. See them active out there working this morning, making some sales while we're waiting, right?
Hey, we got a couple in already, man.
I like it. What are we getting on the annuity side? Anybody had any luck yet? Did you have to give away a gift card yet?
Well, I offered it to the group out in Sacramento. I told them that whoever makes their first annuity sell out of that group, I'd give them $500.
So, wow, that's a nice kick.
I'm trying to give them that nice swift kick. But John has been an enormous help for us, like I told you he would be. And John, how many have we submitted?
We have 1, 2, 3 submitted, and we have Shannon has about 6 she's going to be submitting this week, and then we're working on 2 more. So we're going. I know Shannon, she'll be submitting about 6 in the next 7 to 10 days, and me and a couple other agents are working on about another 3 or 4, and we have 2 or 3 that have already been submitted in the past week. So
were they one SILAC, and then was it another company?
Yeah, we have a SILAC, we have F&G, and then we have a North American currently. And then the rest are going to be mixed between North American, SILAC.
Cool. So we've got some in, Rick. I know that was a big thing. You're like, yo, we need some in. Well, we got some in, my friend.
I like it. And that's the goal. Once you get this thing rolling, it's going to just really take off for you and your guys. And plus, you get some of these guys getting these $2, $3, $5, $10, $20,000 commission drops into their bank account. It's a game changer. It really helps just ease life and make things a lot simpler. Don't feel like you're pressing, and then you can stay focused on your other stuff and just keep pressing through.
Yes, sir. We're excited, man.
All right. Well, do you have the whole team here? Are we ready to kick off, or you got some intro stuff you need to do, or what you got? You tell me how to.
We sent out a little post in our Slack communication channel, and people will hop on and hop off. And then each week we'll get a little bit better at promoting it to get more eyes and ears on it. But yeah, man, we're here. Floor is yours. However you want to take this.
All right. Well, thank you, Michaela. I appreciate that. That's what your name tag says there. That's the worst insult Michaela's had in all week, I'm sure. So, all right. Well, guys, thank you for letting me be a part of this. I really want this training to be about you and what you're doing. So let's start this. If you've got some questions on like where to start, what's going on, I'm going to try to do, I know we hit this in California, but for me personally, I know when still today, even to this point, repeating and hearing things over and over kind of helps me solidify what's going on and how to approach the annuities. So do you have anybody that's really new to this group and new to sales that's coming from an outside job right now? Anybody that fits that category? Elias, is that, I see. All right, let me see if I can change my screen here so I can see everybody. All right, so was that Elias?
Yeah.
Okay, so what have you been doing,
Yes. Elias? I'm new to the insurance business. I started about a month ago, and I'm just trying to focus on these final expense leads and trying to get good at those so that I can, eventually expand my toolkits.
Well, how's it going so far?
It's a bit frustrating. I'm not gonna lie. This isn't an easy transition. It's just a matter of getting a chance to get a hold of people and then, proceeding with the whole portion of the sale or whatever. But yeah, I just gotta stick through it and keep that the mindset.
Yeah, and I'll give you just a word of encouragement to all of the other ones that are here. This is a grind, and so we have to learn to press through. We used to have a, what was it? SWSWNC. Some will, some won't, next call. And so it's just realizing that you don't ever quit on a no. There's so many yeses that are going to happen, so many no's that are going to happen. When you hit the no, just mark that off as one less that you're going to receive that day out of the calls, and then you're looking for the yeses and you just keep pressing through. But the phone, everything's by phone and you're doing everything as a telesale, then the phone's your friend. You just got to hammer it out. And once you get through that grind and just feeling real comfortable to just keep pressing on, know that those sales will come. And if you're able to sell and you can close, then it's going to happen for you. Follow up for you, Elias. What were you doing prior to this?
I was selling shoes at Nordstrom for these ladies.
Oh, nice. How long did you do
Lady
that?
shoes. I was selling that for about 4 years, and then it kind of got hectic. I got married, and then I was working on the weekends. I was working on holidays, and I didn't feel like a tentative husband. So I wanted something that was a little more flexible with my relationship, and then also getting the opportunity to work from home and work on my own time, really.
Sure. Well, sometimes people ask, how do we find money? So, Elias, it's probably a good thing that we're talking today, because I help people just like you take your old 401k from your prior job and turn it into your personal IRA. Has anyone shown you how to protect your old 401k and make it your personal IRA yet?
Yes, yes and no, I think. I don't know. Before I knew anything about insurance, I talked to some guy from Northwestern Mutual. I ended up just meeting him through a school friend, and then I signed up with some kind of policy. Not sure what I even signed up for, but I was one of those guys that said, you know what, I'll pay what I need to pay to get you off my back, and that's what I did.
All right. So, now, guys, thank you, Elias, for sharing that, because really all I'm trying to do through that introduction is I just found somebody on this call that works somewhere else, right? You said you work somewhere else. You're new to this industry. I ask a couple of simple questions and boom, you're telling me about your 401k, right? That's the sales process. If we don't make this complicated, and the other part of your transparency, you don't even know what you got. I mean, we know what we're doing, and you are the best deal for your own 401k. And so I can show you how to go back and look and see what you got. And then if it's not locked up too long, then maybe we can move it over. And the nice thing, if you write your own 401k on your business, you get paid. So if you've got any of you that are on this call, if you've got an old 401k, your wife has an old 401k, then know that you can move that money and you'll be able to help your client, and then you'll also make a commission off of that sale. Okay, so that's the reason why I always look for someone on it. And if you hadn't been in one of my trainings before, Gage, isn't that how we got started with me, you, and Michaela sitting at the table the very first day I met you?
Hey, my man, Pastor Rick, hit us with that line immediately. And hit Michaela with, I help people just like you turn their old 401ks into their personal IRAs. And we were like, what is he talking about? But it makes so much sense, because he literally, every single person that you run into and that you ask them about what they used to do, if they've recently switched a job, they probably have an old 401k, whether it's big, small, or tall, it doesn't really matter, but it gives you the opportunity to get a word track into your memory bank. So then now you're just uncovering opportunities and you're generating leads by having a conversation, or you're generating opportunities by having a conversation to the person in the elevator, to the person that's a server, to the sales rep at the furniture store, whatever it is. I know Rick told us that he was out shopping for new furniture. A 41-year-old dude or whatever said that he recently got this job in the last 6 months and that he was doing something for X amount of years. And Rick uncovered, how much did you uncover, Rick?
Well, we ran the illustration on the 800,000.
A sales rep at a furniture store, because he lost his job and had to get another job. So we're not always going to have those, awesome opportunities like that. But if you talk to enough people and you say that line enough, it's going to be ingrained into your brain like it is for Pastor Rick. And it's going to be second nature to just say that to somebody. So I'm glad that you brought that up. And I'm telling you guys, he does it to everyone he meets. Like, he didn't know who Michaela and I were when we first met, and Michaela has an old 401k, and so it made sense. So I appreciate you sharing.
And I always assume that I didn't ask if you had a 401k. I assumed that you did, right, Elias? And so there you were, you had it, and we're just moving in the process. Then, well, that's exactly what I do. I help protect and preserve those accounts, and I create income better than anybody else in the industry. And as a matter of fact, right now I've got a product that will blow your mind on what it will do for income for you by the time you retire with that retirement account. And so we're just baiting people. We want people to have a conversation with us, and they will throw statements at you if you make yourself available. So here's a couple of things I'd encourage you to do. When you are introducing yourself, it's really important for people to know the broad spectrum of what you do. And excuse me, and while you get paid well for final expense, mortgage protection, Med Advantage, IULs, you get paid on all those. But most of the time, you're not going to ever have that check that comes in like $30,000, $40,000, $50,000. Now, in California, they were talking about premium financing. A guy makes $300,000, $400,000, $500,000, $600,000 on a sale when you find these high net worth clients. Listen, you may have those clients, but typically those have not been my clients. My clients are the lower income, lower net worth, and so they still have retirement accounts. Elias, I'm sure your retirement account after 4 years at Nordstrom's probably not over $100,000. It may be in that $10,000 range, but still the benefit is if you write $10,000 apps, you got $100,000, 3, 4, 5, 6% commission. That's an extra $3,000, $5,000, $6,000, $10,000 in your bank account. And I'm doing it with the very same clients that you're seeing right now. I'm not asking you to go find new clients. I'm asking you to take and maximize the clients that you're seeing right now, and then maximize everybody that you're talking to in every conversation. So here's the introduction I recommend. Hi, I'm John. I'm the retirement income agent for your area. I'm calling about your final expense card that you turned in, your Med Advantage, your IUL that you responded to, your Med Sup questions that you had. I'm here to deliver your pizza. I don't care who, where, when, why. Be the retirement income agent to everyone, because that's a broad spectrum. It's going to cover then as the retirement. And so I'll often say, if I'm in a final expense appointment, as the retirement income agent for your area, don't use the word specialist, if you don't mind, Gage. Let's change it to agent, okay? Because technically, specialist wants to throw out there were some type of titled individual. Keep it as retirement income agent. Thank you. So as we talk to them, you're just through that conversation. Well, as a retirement income agent, when I'm helping clients like you, as a retirement income agent in this area, I found that most of the people that I'm helping at this time are this. And well, thank you for letting me help you with this IEWell, this MedSup, this Med Advantage, because as the retirement income agent, I find that most of my clients find value in this. And then after your sales, if they haven't thrown a statement at you by the time you get through just saying the retirement income agent 3, 4, or 5 times in your conversation with them, then you can say, Mrs. Client, I recall you said that you worked at Nordstrom's. I recall you said you worked at Pepsi, at Procter & Gamble, at Ford, at the dime store down the street. Other clients I've had there have participated in the 401k. Has anyone helped you insure your retirement account yet? We're insurance agents, right? So what you're looking for is, who was it that was making the sale? Was that you, Jared, a while ago, talking about the sale for, was that a IUL, a final expense? What were you selling earlier, Jared? Was it you that was on the phone?
Yeah, it was final expense.
Final expense, okay. So in that final expense sale, you're insuring a life, right? So now we need to know, is her retirement account insured? Because as the retirement income agent for your area, I also insure retirement accounts. Is your retirement account insured? I'm so glad we're able to get your life insured, your life, your husband's life. I'm so glad we're able to do that. Has anyone talked to you about insuring your retirement account yet? And so we always just assume they have one until they don't. And they'll tell us if they don't. Well, as the retirement income agent in your area, I help clients just like you insure their retirement account. And then you just wait for them to say, oh, I didn't know I could do that. Yeah, if you know how much you've got in your account, I'll be glad to get with my retirement income team. That's me or John. And so get with the retirement income team. I'll put together a plan to insure it and to create the income that's necessary off that retirement account. Now, and let me make sure we go through a couple of different things. Right, today I'm going to give you scenarios on how to find the money while you're already talking to these clients, okay? So another follow-up, Jared, in your situation. Mrs. Client, man, I'm so thankful as a retirement income agent. Helping you is just one of the delights. I'm so glad we're able to get this. I also have another plan that might be able to help you pay for the premium on this. A lot of my clients are on a fixed income. If I could find a way to help generate a little extra income for you to help pay for the premium, would that be helpful? So what am I going to do with that? Well, I'm going to find out, do they have a savings account? Do they have a CD at the bank? Do they have that retirement account? And I'm simply going to take that money and put it with an insurance company, turn on an income stream that's going to pay for the premium. How easy is that? People are wanting to pay for the premium with some funds, right? Well, you can guarantee an income to help pay for the premium out of their retirement account, out of their CD at the bank that they're getting 1 or 2% on, out of their inheritance that they got, out of a savings account that they've got, out of their checking account with excess money. As my mom got older, she spent less and less money and more money piled up in her checking account. She died with $60,000 or $70,000 in her checking account. And that was after I had moved a couple of times, moved money over to an insurance product to give her a better rate of return. And so just being able to help with those kinds of things are very simple and very easy while you're talking to those very same clients, okay? All right, sorry about that. Am I still on? All right, I'm going to try to turn that Wi-Fi off so it won't ring over to my iPad. All right, we'll see if that protects me there. So, all right, so paying for the premium is a real simple way. Now, let me give you a quick synopsis on why this next one is such a good transition while you're with your clients. This one I call the history of income, okay? Retirement accounts are monies that we get a tax incentive to put into our retirement account. Go back to the 30s and they started Social Security. Why? Social Security was created to keep people out of the rigors of the poorhouse. That's a literal quote from the time in which they initiated Social Security back in the 30s, okay? Then we come up to the 40s. World War II happens, everybody goes to war, everybody comes back from war. Now we've got all these husbands and wives, they're reconnecting, and there's this big baby population that's kind of happening and just coming on, exploding on the society. It's such an explosion that they call it the baby boom. And so this baby boom starts from 1946 to 1964. And it's the largest population of births that we've had in the history of our United States. And so these babies are being born to these families that are back from the war. Now, came back from the war, everybody needed some workers. So they offered pensions. Hey, Moises, if you'll come work for me, I'll give you a paycheck, but also when you stop working for me, I'll give you a lifetime paycheck known as a pension, because they wanted people to come work. As a matter of fact, I'll give you insurances, I'll give you health insurance, I'll give you this pension for life. So you need to come work for me. Well, in the 70s, they realized how expensive income was. These things are imploding. So the government steps in with a law known as ERISA, Employee Retirement Income Security Act. The act means that it's a law, and they're trying to protect these pensions from going belly up. But also, now the employers can't afford to do this anymore, so they're switching gears. So now in the ERISA, we've got a new setup. The government says, okay, pensions are gone, so we need you to continue to contribute to your retirement plan. So, Carlos, if you will contribute to your retirement plan, I'll give you a tax break. So Uncle Sam says, hey, Carlos, you made $100,000 this year. You can, in the 401k plan, you can contribute up to almost $20,000 into your 401k. And Mr. Employer, if you'll add some money to it, matching funds will also give you a tax break. So the employers will add 3, 4, 5, 6, 8, maybe 10% of your paycheck matching funds into that. So if they're putting in 6%, then you should put in 6% to get 100% match. Listen, there's no better place than getting 100% on your money. So if you've got clients out there contributing to the 401k, they want to keep doing that so they get that match. So let's say that you put in, Carlos, you put in 20,000, your employer put in 5%, so that's another 5,000. So you've got 25,000 in your 401k after 1 year. You do that over 20 years, man, you've got a pretty good nest egg. You've got $500,000-$600,000 in that retirement account. You've never paid taxes. You got a tax incentive to put that money into that account. You had 100, it reduced to 80. You paid taxes on 80,000. 20,000 goes to the 401k plan, never taxed. Well, who gets cut out of the deal on the taxes then? Uncle Sam. So he gives you the benefit, but that's not an eternal benefit, right? He says at some point in time, you got to pay the fiddler. So you made 100, paid taxes on 80, you retired, your whole income is Social Security and your investments, right? Or your 401k. So you take that money now and you're supposed to use it to supplement your Social Security. So your Social Security, let's say it's 30,000 a year. And so now you've got your Social Security coming in, but you need to supplement it. So you're supposed to take some of this 401k to add back into it. So let's say your total income now is about 60,000. Well, that's less than what you had when you were working. So your taxes are less, and Social Security, that's not going to be taxed like that. So your net tax liability is probably 10%, 20%, maybe at the most. So you're going to pay less taxes on this money at that point in time. That's a good deal. We got to defer that. We got interest on our money we put in there. So we get this whole triple compounding thing going on. So that 600,000 though has never been taxed. And Uncle Sam says, take it out during retirement. Sometime after age 60, sometime before age 72. And so you must, now hear this, okay, guys, this is so, so important. Don't miss this. You must take income out of that at some point in time. Somewhere between age 60 and age 72, you have to start taking money out of that retirement account. What happens if you take it out before age 60, before age 59 and a half? If you pull that money, so Elias, you rolled that money over to Northwestern or whatever that was. So you have that money. You have to start taking money out sometime between 60 and 72. If you don't, there is a 10% penalty. That is correct. Was that Rodney that typed that in there? I don't even see Rodney on here, but somebody, I think it popped up as Rodney typing in that it was a 10% penalty pre 59 and a half. So you don't want to pull that money out. You want to take that money and leave it to age at least 59 and a half, or let's just call it 60. But let's say that you're an insurance agent. You're killing it now. I've got agents out there making $500 to $1 million a year selling life insurance and annuities. So now you reach age 72, you've got $1 million in your retirement account, but you don't need it. You're just financially independently wealthy because of what insurance has done for you through the years. So you just turned 73 years old and you didn't need that money. So you're just not going to take it out. You want it to all go to your family. So you don't take it out. A knock on your door. You go to the door on your birthday party and it's Uncle Sam. He's standing there with a couple envelopes in the hand. And you say, oh, Uncle Sam, I didn't invite you to my party. I know, but I wanted to come and bring you these special items today. And Uncle Sam hands you one and it's a birthday card. You're 73 years old. Oh, that's great. He hands you another and you open it up and says, wait a minute, what's this? And Uncle Sam says, hey, if you remember, Connor, we had an agreement. The agreement was that you would get a tax benefit, but by 72, you would start taking money out of that account. And you didn't do it. I know I don't need it. I'm wealthy. I'm an insurance agent. I made tons of money. I don't have to have that retirement account. I know, but we had an agreement. The agreement was by 72, I need some tax money. So start pulling some of that money out. The first year is 3.65%, and you didn't take it out. I know I didn't need it. All right, but you were supposed to. So here's the deal. Connor, on that account, you're supposed to take $40,000 out this year, and you didn't do it. So here's the penalty. It's not a 10% penalty. It's a 50% penalty. And so I need you to cut me a check for $20,000 as a penalty. And because you've done really well in life, you know, with tears in your eyes, you're writing out that $20,000 check, you give it to Uncle Sam, and he starts to walk away and he says, oh, wait, I forgot one more thing. You need to pay taxes on all of it. With all your money, you're in at least the 25% tax bracket. So I need you to cut me a check for another $10,000. So on that $40,000, you keep 10 and Uncle Sam walks away with $30,000 of your money. It's because it's a penalty. And so here's the deal. It's always, and many times I'll carry a quarter around in my pocket because 75% of the money went to Uncle Sam and you got to keep 25%. So you take the quarter and you pull it out of your pocket and you ask your client, say, and Mrs. Client, would you mind giving me $1 for this quarter? And a lot of times they'll look at you and say, well, okay. And they may give you $1. And then you pull a roll of quarters out. Say, wow, that was really fun. Can we do it for this entire roll of quarters? Can you give me $1 for every one of these quarters? They're going to look at you like you're crazy, right? And so here's the lead in. Well, ma'am, if you don't have your retirement account set up, you will be turning your dollars into quarters during retirement. Did you know that there's a 50% penalty on your retirement account if it's not set up correctly? Mrs. Client, not a single one of my clients have ever suffered the 50% penalty on their retirement account. If you know what you got in your retirement account, I'll be glad to take a look at it with my retirement income team, put together a plan to help you avoid the 50% penalty on your retirement account. Now listen, guys, hear me clearly. Retirement accounts must become income. It's not optional. Take it out early, 10% penalty, take it out late, 50% penalty, plus the taxes on all of it. You are a lifesaver for your clients to go in and to offer to help them avoid the 50% penalty. So I said all that to bring you to this last little transitional statement. When I'm in the final expense home, and I haven't had the proper way to get into it so far, so I'm still waiting to try to ask that retirement question. I say, oh, I've made the sale, we've got everything done, we're ready to head to the car or make our next call. Oh, by the way, Mrs. Client, has anyone explained the 50% penalty on your retirement account if it's not set up correctly? Has anyone explained the 50% penalty on your retirement account if it's not set up correctly? Oh, they haven't? Well, none of my clients have ever suffered the 50% penalty, and it's on every account. And so if you know how much you've got in that account, I'll be glad to help you with it. I'll get with my team. Could I make a call back to you next Tuesday at 3 o'clock and we go over that? So has anyone explained the 50% penalty on your retirement account? All right, so those are some of the easy transitions that you can do while you're talking to the clients that you're talking to right now. Mrs. Client, it's a good thing we met today because I help people just like you avoid the 50% penalty, find a way to create income to pay for their premium, help you turn your IRA into your personal, or your 401k into your personal IRA. All right, so those are simple transitions. I won't go too long today. This is just kind of an introduction, but listen, guys, no one's better at this than you are. As I always tell you, you're an insurance agent. What do insurance agents do? You insure crap, right? So have you insured a retirement account? The broker's not going to put insurance on it. The plan administrator is not even geared to put insurance on it and can't create income for it. So you're the best deal in town. You insure it, protect it, grow it, and then you create a lifetime income that they can never outlive. Simple process. Now, we aren't even talking about product. Product doesn't matter. All the products will work. If you don't get the concept of this and believe that you absolutely are the best deal in town, then guess what? I'm going to show up in that home and I'm going to get the retirement account. And then also, guess what else I do? As the retirement income agent, I also offer Med Advantage, Med Sups, final expense, IULs, mortgage protection. I can insure all their crap, right? And if you didn't insure their retirement account, and even on the sale that Jared was talking about earlier, I think I heard numbers, looks like it could be a premium of a couple of hundred, maybe $250 coming out of that home. $250 a month coming out, that's awesome. But he didn't ask about her retirement account. So I go in and find out she's got a retirement account for $150,000. Oh, that other knucklehead agent, you mean he didn't talk to you about insuring your retirement account? Really? Oh man, isn't that about your largest cash asset outside of your home? Wow, I'm really sorry that he didn't do that. You know, as a retirement income agent, I not only insure your retirement account, but I probably have some even better rates on insuring your life with the final expense plans too. So if they're trusting
I'm gonna
me,
hit
I'm
What's
hitting
that?
them with that soon as I get them approved here and show them these nice numbers here on these new policies. Better believe I'm going to be implementing some of all of what I've been hearing here.
All right. Well, then I removed the knucklehead comment from you. Then
Oh, I'm a knucklehead for
you
sure.
get the star today. So we'll give you the little crown. So can you put a crown on Jared's head for
I
doing?
don't think I
good?
got one big enough to fit, but
That's probably true at times. But the idea is, if I get the retirement account, who are they trusting more, me or Jared? You know, they gave me $150,000. They're giving him $250 a month. Don't you think I can come back in and try to undercut that other sale and make something better? Get them a med sup, you know, look for all the avenues where we can insure people, right? We're doing that in every sale. So all we're trying to do is help your clients more and help you more, because if you insure everything in the home, then you don't have to worry about some other knuckleheaded agent coming in and trying to take your client. You don't want people like me in your home. The only reason why I buy final expense leads is looking for the retirement account. About 1 out of 20 final expense leads will bring you to a retirement account. About 1 out of 20. So keep this in mind then. If you make, some of you probably make 20 calls a day, but if you make 20 calls a week, 20 contacts a week, you should find at least one annuity opportunity. If you did that all month, that is 4 annuity opportunities a month. The average retirement account's probably $150,000 to $175,000. You can Google it and it'll tell you some numbers. Okay, so let's call it 100,000. So if you close 50% of those, that would be $200,000 per month. Do you realize that that would put you at $2 million a year? And so he's throwing out 140,000 as the average. That's also probably the income that you could make off of that. So if you could make an extra $100,000 on the very same clients that you're working with right now, would that help you? And see, it's not complicated, guys. If you make this, I don't understand the products. Hey, Gage, are y'all doing anything with Med Advantage?
We're entering our first AEP.
Okay. So that means everybody on here has passed the AHIP crapola?
For the most part, correct, sir.
Holy cow. If you can get through the acronyms and abbreviations, and if you can understand anything about AEP and pass that certification, don't you ever tell me an annuity is complicated. It just doesn't make sense. So annuities are simply taking a retirement account over here at a company, moving it to an insurance company and insuring it. And they'll give interest. Now, I'll go over and show you how they pay the interest and how they create the lifetime income. But that's it. There's nothing more to it. It's in a company, uninsured. I want to move it over here. So when it goes out of the company, it can go to the bank, it can go to a broker, it can go to an insurance company. Well, banks don't pay any interest. Brokers have a risk and they could lose money and they don't create as good an income as I did. So I insure it and create the better income. So all I'm doing is putting it with an insurance company so that it's going to grow that account, create income, and be there for the rest of their life. That's it. Don't make it complicated. Insure a retirement account today. That's all there is to it. All right, questions? Is that good enough? You got any other stuff on that? That's kind of a 30,000 foot overview today.
No, man, that was awesome. I think it was a great intro. If anybody has questions for my man, the floor is yours, to pick his brain apart. And I think he hit it on the head. It's just by simply asking the right questions and saying the right things. You say it enough, it becomes second nature. And we have a team, exactly what he says. I'm not, I'm the retirement income agent, but I'm gonna send your information out to our retirement income team. And now you're leveraging John, you're leveraging Rick and Todd and you don't even got to do anything but ask the questions. That's that simple. I mean, Michaela's mom wrote a $400,000 annuity, and she had no idea what she was doing. But she literally just asked the right question, uncovered a bunch of money. Dude lost 100 grand in the last year. It was a no-brainer. And now Michaela's mom's going to get paid $35,000. So crazy,
Very nice.
crazy, crazy good opportunity, guys, to just start implementing these questions into your final expense presentations and sales. And you're going to end up generating yourself extra income that you've been leaving on the table, essentially.
And then once you find the money and you send it to me and I make a presentation or put together an illustration, I can send it back to you. And if you want to, we'll do a Zoom, walk you through the whole process of how to sell it, or how to present it, how to sell it. And then it's a process. I mean, I know you can make a final expense sell and get paid by the time you hang the phone up. But with these, it may take 4, 6 weeks, sometimes 8 weeks. I wrote a $300,000 case about 6 weeks ago, and they're supposed to be transferring the money within the next 2 weeks. So I just stay in touch with my client so she doesn't panic or worry, knows what's happening. National Western Life is holding on to the money forever, and they're just not letting it go. They're behind. And so it's a slow process, but hey, it's going to happen. I keep my client happy knowing that it's not me, it's not the company we are placing it with, it's the people that have her money that keeps messing it up. So it's going to happen. And so we just go through the process. And I'll help you with all those things. Todd, Mark, we're all here to help you. So let me give you my cell number. If you don't have it, you get my cell number, 913-909-6088. And you can reach out to John first, that's fine. But you can feel free to reach out to me. If you call John, can't reach him, then call me if I say I'm in a meeting. Like I've gotten a couple of calls this morning. So I just tell people I'm in a meeting, and then I try to call them back when I'm done. So call me, then text me. If I say I'm still in a meeting and you need help right away, call Todd, text Todd. And then we've got Mark and Asher that we can lean on as well. So just know that we've got a process. We want you to get answers when you need them, and never feel like you don't know the right information for this. You don't really, I'm sure, Elias, you're still got your head swimming with all this stuff, don't understand half of anything that you're selling, but it doesn't keep you from making a sell. We just go confidently knowing that all these products work and you're the best deal in town. Go out there and make that sell and confidently approach finding the retirement accounts. And man, it's your lucky day, because I help people just like you with their final expense or mortgage protection, insuring their retirement account, make their 401k, their personal IRA, help you avoid the 50% penalty, help you find extra funds. Oh, one final one I'll give you. I'll throw this one out. You find that person that's uninsurable. You ever run across those? Well, as a retirement income agent, I do run across people like this. Have you considered self-funding your burial plan? I wrote a $30,000 case earlier this year with that very statement. Client's uninsurable. And so I said, well, they said, well, what do you mean self-funding? Well, you mentioned that you had that retirement account, you've got that CD at the bank. I noticed that you've got $60,000 in your savings account. How about if we carve out $30,000 for you and $30,000 for your husband? We'll just set that aside in a insured account that takes no underwriting. It will grow it, but then we'll just kind of designate that as your burial plan when you die. How's that work? And that's exactly what I did. I moved 2 accounts into one, called it a burial plan, set it in a growth account, and now when she dies, there'll be something to bury her. Just carving out some of their own money, designating it as a burial option for her. So you got something better than Gerber for a guaranteed issue, right? All right, any other questions or anything else?
I want to piggyback on one thing that Rick said earlier, just from proof in the pudding, is you'd be surprised, he's 100% correct, how many, not only do we take people's life insurance sales that they previously did, but they didn't ask about annuities. or they didn't ask about the proper questions in finding money. And then they say, hey, I got this life insurance policy 2 months ago. Can you look at that as well? Because now you gain a higher level of respect, because you're not just a sleazy life insurance agent from Groundhog's Day. You're the retirement income agent, how he says it, right? And then not to mention how many annuities we have with clients that they reach out to us and say, hey, this guy reached out to sell us. This just happened to us literally yesterday. Hey, this guy reached out to us to sell us a life insurance policy. He wants to give us $100,000 for $300 a month. It was like $380. And they said, what do you think about this plan? Well, they sent us the plan. We got to quote and compare it and sell that policy. That agent just did our job for us and we got paid on it. So understand that that's how it works. Like he's not just saying that I'm proof in the pudding for sure. So not only do you take other policies because you have higher value, but when people try to sell your clients, they come to you because you have a higher respect. So you don't get backdoored as many times for sure.
Yep, absolutely. Good job. Good thought, John. And again, just remember that if you will use that simple transition, man, it's a good thing we met today. That's a simple way to help people know that we're about to bring some value to the table. And I can't tell you how many times I use that on a daily basis. And I'm always just trying to find that question. Well, what do you do? How long have you been doing that? Oh, really? Well, it's a good thing we met today. It just opens up so many doors. So use that personally outside of just your calling that you're doing on the phone. You'll find a lot of opportunities in that with everybody you meet. The clerk at the store, the salesman on the floor, the lady down the street with her divorce, all that.
Uber
Right, what else? Got
drivers,
anything?
Uber drivers, people you sit next to on the plane.
And Rick, what was the number you said, the amount of old 401ks that go like, that are just sitting there, like not doing anything? What was that number?
What was that question?
I can't remember what you said. There was a specific number that you said that there's like old 401ks or old retirement accounts that are just
Oh,
sitting
$4 trillion of lost money.
Yeah, 4 trillion you said?
4 trillion with a T. So the largest wealth transfer in the history of mankind is coming out of the baby boomer generation. So 10,000 boomers per day are retiring, okay? I'm sure some of those are in your neighborhood. 10,000 a day. So you didn't get to it today. Well, guess what? 10,000 more tomorrow. Oh, you're busy tomorrow. Well, guess what? 10,000 more the next day. It's up to you when you want to start capturing some of those retirement funds, but 35 trillion in wealth transfer and 4 trillion out there in lost money. People don't even know where it's at. So I'll give this last closing example. My neighbor down the street going through a divorce. I stalked her till I caught her walk. I was paying attention till she started walking up the street one day. Go out to talk to her, asking her about how things are going with her divorce. And you know why I'm doing this is because at one point in time, we're going to make my favorite statement. Well, it's a good thing we're talking today because she's going through a divorce, right? So I let her just tell me about the divorce, and I'm empathetic and I do care about her. She's a sweet lady. And so I said, well, you know, it's a good thing we're talking today because I help people just like you when they're going through a divorce, take their portion of the 401k they're going to get and move it to their personal IRA. And she said, really? You can help me do that? I had no idea what to do with that money. So we talked for another 5 or 10 minutes and she said, you know, I've got an old 401k too. Can you help me with that part? It's only got like $130,000 in it, I think. I said, okay, sure, I'll help you with that one. And then before I went out to help her and meet with her about these accounts, she called me on the phone probably a couple weeks later. Said, Rick, you're not gonna believe this. I forgot I had this other job I worked at. I have an old 401k that's got $85,000 in it. I'd totally forgotten about that. I said, yes, I can help you with that one too. So, you know, I made an extra $30,000-$40,000 just by being available to my neighbor. And she thinks I walk on water. She loves me to death because I helped her with something that she had no idea what to do with. I don't mind doing that for $400, let alone $40,000, right? You know, so it's just a simple way. Just be kind, love people, help people, and it's a good thing. It's a good thing people meet you. So just listening for the opportunity to find that money, that's the key. All right, so y'all have to think on what things you don't know, what things you want to know. Make a list, send them over to Gage and to John. We'll let them kind of put that together, and then we'll coordinate together to make whatever our next week's webinar is going to be about. And then I may bring Todd in. We'll talk some products too. We'll actually go over some products, run some illustrations, show you how to run that. If you're not in California, or you got clients and you're calling around the country besides California, then we definitely want to talk about the Vega for young people and what that's doing for anybody that can wait 10 years for income. It is mind-boggling. And I tell my clients that when I find someone that's younger with that 401k, like Elias, if you've got at least 10,000 and you can put 7 in for your IRA and get to 10, man, I assure you, what you see on a $10,000 deposit at age 60 or 65, the income is unbelievable, literally unbelievable. And so that was how I got the lead for the 800,000. The guy says, okay, you piqued my interest, I'll take a look. So that's what you end up doing. Just, you've got the best deal in town. You're an insurance agent, go insure some crap and make sure some of that crap is a retirement account. All right. All right, where'd Gage go? Yeah, you're very welcome, Marisol. I think that was you that said that.
What's going on, my man?
All right, I think we're done, unless you got some other questions. Anybody else?
I think this is
I do actually have a question.
I do have a question too. Oh.
There we go.
Okay, so
Michaela first. I'm just kidding.
who's going? Michaela, did you have a question?
Yeah, go ahead, Michaela.
Oh, no, I didn't have a question.
Oh,
all right,
okay.
Marisol.
Okay, I had a question, and I think I'm just a little confused. I don't know if you said it or not, but so I know last time at the conference we had back in Sacramento, you said you were trying to help a lady, but she couldn't move or roll over that 401k because she was still working, correct?
All right, so every company has their own rules.
Right.
So whether you're working for the government, you're working for the city, working for a for-profit company out there, whatever it is that's in your area, Procter & Gamble, GM, Coca-Cola, Tesla, wherever you're working, okay? They make the rules. So I talked to one guy who's 40 years old, and we called the company, and you always want to call the company and verify if they can move the money. Say, hi, I'm sitting here with Marisol. She's worked here at Tesla for the past 15 years. She's looking to possibly protect some of her retirement account. Is she a vet? Does she have the privilege of moving that to another plan and provider? We're not taking it out. We're transferring, we're rolling it over to another provider. Does she have a withdrawal privilege on her account? Because we don't know. So one, Tesla may say yes, Coca-Cola may say no, GM may say no, or they may say not until they're 59 and a half, not until they're 65, not until they retire. So my young lady that I am riding around in a side-by-side with said, wow, it's a good thing this came up today because I help people just like you take the portion of their 401k they want to protect and move it to a personal IRA for growth and safety and for income. And so I said, the one unknown is I don't know if you're eligible. So she went back, called her plan, and they said she's not eligible till she quits work. So
I guess
it's different.
Got it. Okay, and I guess my piggyback question to that was, what about with a Roth IRA? Is that different, or can that be moved? or rolled over?
Where is it at? Is the Roth inside the company or outside the company?
Outside the company.
If it's outside the company, it absolutely can be moved.
It can be
If
moved.
it's
Okay.
in another annuity, there could be some surrender charges. I don't know. If it's with a brokerage account, it can absolutely be moved, but the broker will fight tooth and nail and tell your client what an idiot and knucklehead you are, and they should never do business with you because they're paid by assets under management, AUM.
Okay.
They hoard
then-
money. Brokers
Okay.
hoard money. We distribute money, and we're better at it.
And do they, with a Roth IRA outside of the company, can they move that into an annuity at like any age that they have that Roth IRA, or do they have to wait 59 and a half?
No, we're not withdrawing the money. We're transferring. Lateral transfers are allowed, okay? So we're not, the thing about a Roth is we can't cash out, but you can't cash out an IRA either without a penalty. A Roth is going to have a 59 and a half penalty as well, same thing. So we just aren't paying taxes. And I'll tell you this, Mark teaches a whole webinar on the cumulative process of math. A times B equals B times A. Pay taxes today when you're making more money, or pay taxes later with a non-Roth IRA when you're making less money and paying less taxes. Growing tax-free is not nearly as attractive as people like to make it. And so if you're early in your process and you're just contributing and you don't need the tax break today, sure, a Roth can work. So it just depends. But it's really a philosophical approach over a beneficial approach. You're gonna pay the taxes early or late. Well, am I making more money today, paying higher taxes today? Then maybe I need the tax break today and pay taxes in retirement. And it's okay, because it comes out identical regardless of how you do it. Uncle Sam would like for you to cash out all your 401ks today and make them Roths, because he gets the tax, right? And at your highest tax bracket you'll ever be at, because you're making more money today than you'll ever make. And then there's the whole fallacy of our taxes going up or down, and we don't have time to get in that one today, but it's not up. Okay. So just so you know. All right, good question though. Thank you. And who else?
Okay, so I did have a question.
Who's that?
My brother actually asked me a couple weeks ago.
Who's asking the question?
Oh, sorry, it's Deanna.
Oh, all right. See you down here. You got a snake around your neck or something?
Yeah, it's a lizard.
Okay.
Anyway, my brother is a business owner, and we were on the subjects of talking about getting an IUL or an annuity started for him. And he actually brought up the question about infinite banking. I don't know enough about infinite banking to say yay or nay. What should I approach him with?
If he's doing startup, I'd approach him with what you know. You're an insurance agent, you insure crap, you can write him an IUL.
Okay.
So it's like if you go to McDonald's and ask about a Whopper, what are they going to tell you? That's terrible. We don't like Whoppers. Big Mac, that's the deal. You go over across the street to Burger King and say, hey man, I was thinking about going over and getting a Big Mac. What do you think? Oh, Big Macs are terrible. Why would you eat that? You need to get your Whopper, man. So sell what you know. What you have is a great deal. IULs are wonderful for that kind of stuff. And I don't know anything about infinite banking and don't really want to know, because I'm an insurance agent. I insure crap. So I know my products do exactly what they're intended to do. And it's a phenomenal deal. So sell the phenomenal deal that you got. And if he wants to go check something else out, say, you know, I just don't know enough about it. But I do know that this really works. And I've got a million success stories I can tell you about.
Okay.
And if you need to get one of the experts like Chris or whatever on board, then, you know, get them on board to talk a little bit more in detail. Say, you know, I've got a team. If you'd like to talk and ask more questions, maybe they know about it, but here's what I suggest.
Okay. Appreciate you.
Yeah, absolutely. Great question.
Think we're good, my friend.
All right, good enough. So we'll same back channel next week.
Yes,